Well, 22,560, that's where the Nifty is at. The mid-cap index, though, is looking like it's cooled off slightly from the day's highest point. As of now, 49 to 826 is where the Nifty mid-cap index is at. A lot of these EMS companies actually buzzing in trade. Look at PG Electroplast. That stock is surging higher in trade. So is Keynes, up nearly 6%. Also, keep an eye out on Amber Enterprises. This stock is also trading higher. The IT index, as of now, is trading with gains of nearly 3%. So lots of IT names in focus, and one other such name is Cyient. The management is joining us. The company has created a dedicated subsidiary for its semiconductor business, which currently contributes nearly 4 to 4.5% to its overall revenues. To discuss the rationale and the way forward, we are now being joined by Krishna Bodanapu, Executive Vice Chairman and Managing Director of the company. Well, good afternoon. This is Vamakshi. I just wanted to understand from you, what is exactly this ASIC turnkey business for the benefit of our viewers, and what is the kind of opportunity that you see out here, and what is the kind of total addressable market here?
Thank you very much, and good afternoon. The intent behind creating this semiconductor subsidiary is, as you can imagine, as more and more things have electronics and intelligence built into them. And when I say more and more things, it's anything from what you look at on a daily basis from a household appliance like coffee machines or air conditioning, HVAC systems, etc., to, of course, the more complicated things like automobiles, aerospace, and ultimately to data centers, computing equipment. The use of chips and silicon is increasing dramatically in most of the industries that we work in, and most of the equipment that we use on a daily basis. So as the use of chips is increasing, our intent is to create this capability, which will help our clients design these chips, which will help our clients manufacture these chips and ultimately deploy these chips. So the intent behind this semiconductor subsidiary is to enable our clients to more effectively design, manufacture, and get hold of these chips or these semiconductors. Like I said, the use of semiconductors is going up dramatically in all applications. All applications day to day or that we use, and that means that this industry, which is about a $600 billion industry, is expected to go to about a $2 trillion industry in the next 10 years or so. That's the opportunity space that we're addressing. We believe that a significant portion is what is called analog to digital on high nodes. These are the chips that we use in many of the day-to-day applications. And those are the chips that Cyient Semiconductor will target.
Mr. Bodanapu, good afternoon. Thank you for joining in. Why is this that you have opted to create a separate entity? Is there an intention to bring in more partners as you go ahead? Because, of course, this is a very capital-intensive business, right? So, do you intend to bring in more partners ahead? Is there a plan to list this out in the near future as you have done with Cyient DLM? What is the ideal size you would be looking for if you embark on such a plan?
No, absolutely. And I think the intent behind carving it out as a separate entity is very similar to what happened with DLM. The economics of this business are very different to the economics of a technology services business that is Cyient. The capital intensity is different. The cyclicality is different. The investment cycles are different. So to make sure that we invest for this opportunity, again, it's a huge opportunity and it's a once-in-a-lifetime opportunity. And therefore, to enable us to invest to address this opportunity without sort of damaging the economics of Cyient Limited or what our shareholders expect, that's the reason why we created this separate subsidiary. It's also semiconductors is a very ecosystem-driven industry. We will have to have various partners for various parts of the ecosystem, which we will work with and bring in. I think it's a bit early to speculate on listing because right now it contributes to about 5% of Cyient's revenue, which means it's about a $35 to $40 million business. Of course, it has to be much larger before we consider anything like that. But one more thing I'll add is the Cyient board has committed to investing up to $100 million, and they've also authorized us to look at external capital. So we're, at least for the time being, we believe that we have the right access to capital and will grow this business for the opportunity it presents before we look at any external listing per se.
Well, that's a huge opportunity, right? But let's talk financials. In the first 9 months of this financial year, the semiconductor business revenue stood at 225 million rupees. Now, can you help us understand what is the kind of growth rate that you've seen so far historically in this business, and what is the kind of growth rate that you're envisaging going forward?
Historically, this business is a bit of a cyclical business, but taking that into account, it is a fairly good growth business. I think we would have grown about 10% year on year if you look at the last 5 years or so. But again, the intent going forward, like I said, is the addressable space is increasing dramatically, both because of the usage of semiconductor in various industries, but also geopolitics with the intent to diverse a little bit out of some of the current sources of semiconductors, India becoming a more and more important market. So therefore, the opportunity set, we believe, is significantly higher. And obviously, we're doing all this because we do see an opportunity to significantly accelerate from that 10% growth rate. That will require a different set of economics, capital, etc., which is the intent behind what we're doing here.
What has the revenue growth been for for Mr. Bodanapu historically for the first 9 months? And for the overall semiconductor business as well, it's around 4 to 4.5% of your revenue currently. Do you see that number going to double digits, say, in the next 3 to 5 years?
Yes, absolutely. That's the opportunity that we're seeing, and that's the reason why. Because to address that opportunity, though, we'll have to look at the economics a little bit differently, because these are customized chips, which means we will have to invest upfront. We will have to take in a little bit more of capex from an R&D perspective, and also from the materials, etc., that go into the R&D. So that's why we're spinning this off separately, because we see that proportion changing. But also it will require investments and it will require capital. And that's why we're doing this as a separate entity.
So you expect to accelerate from the 10% revenue growth, but what are the kind of margins that you enjoy in this business? Where are they at currently, and where do you see them heading going forward?
So the margins are not very different from the rest of the services business today, because we run it more as a services business, not as a turnkey ASIC business. As margins accelerate, historically, semiconductor businesses also enjoy a better margin profile. So we also expect margin to get better along with the growth rate, just because of the nature of the semiconductor business. Now, of course, I do want to caution that it is because it's also a different business which requires a different investment profile. We have to do a lot of those things right. But the opportunity set to both accelerate growth and margins is much better. And that's one of the key reasons why we're going down this path.
All right, Mr. Bodanapu, thank you so much for sparing time and joining us today. Wish you good luck for the rest of this year as well. The management there of Cyient saying that they're committed to investing around $100 million and authorized, and look at external capital as well. The stock, though, slightly off the highs of the day, 3.5% higher still. At 1160 is Cyient. Take a short break. More on the markets and specific stocks on the other side. Stay tuned.